With the crypto market in chaos right now and the market down over 50% from its all-time highs, it becomes even more important to keep a cool head and not get caught up in the fear of further drops, the uncertainty of where the market is headed, and the doubts that the crypto market will ever go back to setting new all-time highs. And it's in times like this when knowing and reminding ourselves of sound investing principles is needed to help us get through the psychology of a bear market. So in this video, I'd like to share the very best tips and guidance I know of for when we find ourselves in a market crash. And so in this video, we'll be looking at the 3 types of people, and do you know which category you fall into? Lessons from the masters, and these are proven investing principles from Billionaire Investors. We'll answer the question, is crypto dead? And then I'll finish with sharing my game plan of how I'm personally going to be navigating these waters. As always, if you do find anything useful in the video, then drop a like, always appreciated. As with most things in life, investing is 80% psychology and only 20% skill. And it's not so much about what's happening in the market, but it's how we process what is happening and how we react to what's happening. Now, before we jump into the 3 types of people, due to the nature of this video, I am going to need one of these. A quick disclaimer.
This video is for education purposes only. You should seek investment advice from a registered professional before making any investment decision. This video is not responsible for any investment actions taken by its viewers.
In the world of investing, there are 3 types of people: the investor, the trader, and the amateur. Now, investors would be people like Warren Buffett, Jack Bogle, Ray Dalio, Cathie Wood, and this is where investing is their primary profession, and they will likely have years, if not decades worth of experience, and they will have done their 10,000 hours to get to mastery and learn some valuable lessons along the way. Now, they are pretty good at no longer letting their emotions get in the way, and they invest primarily using principles. Next up, we have the traders, and similar to investors, they will derive most of their income from trading, and again, they will have years, if not decades worth of experience. Think of trading more as short-term and investing more as medium to long-term. Most buying and selling of traders will happen within a 1-year period. There is scalping, where they'll do multiple trades per second. Day trading, obviously this is where they're buying and selling throughout the day. And then you have swing and momentum trading, where you might be trading over weeks or months. And traders, like investors, will likely have read many books on trading, done several courses on trading, and they too will have done their 10,000 hours to get to mastery. And where investors use principles, traders use technical analysis, and they work from indicators. And finally, we have the amateurs. Now, amateurs is not meant to be derogatory. It just means you're doing it on the side alongside a main job. And this group does make up most people, and probably most people watching this video. The amateur is also known as the retail investor, and unfortunately it's also known as the dumb money, with the smart money being investors and traders. Now, some of the biggest differences with the amateurs include: most will not have read any books or done courses on investing. Most will not have years or decades worth of experience. And most get caught up with the emotions of investing. And most will be buying and selling at times of high emotion instead of using principles and indicators. Now, I am studying and learning everything I can to fit into the investor category, and the purpose of this video is to share the proven investing principles from Billionaire Investors. And this is because, sadly, it's the amateur investor that typically ends up losing the most money in market crashes. Okay, so those are the 3 types of people. Now, let's move on to some proven principles from the Billionaire Investors. Firstly, as crypto is only 10 years old, we don't actually have big investors with over 50 years experience. However, many of the same lessons and principles that we've learned in the stock market can also be applied to the crypto market. The stock market is made up of millions of investors all around the world, just like crypto. It has thousands of companies to choose from, just like crypto. It's had many boom and bust cycles and 100 years of data that we can learn from. And first up, we have Jack Bogle, founder of Vanguard and creator of the index fund. The stock market is a casino in the short term and a machine for compounding wealth in the long term. So this is a reminder that in the short term, the markets are very similar to casinos. It could just as easily drop 30% or gain 30%. And in the short term, no one knows where it's going to go. So this means it's more like gambling than investing. So it's all about having a longer term time frame and keep it over 1 year, as this dramatically reduces your risk. Next up, we have arguably the world's greatest investor, Warren Buffett. And although I don't agree with everything Warren Buffett says and does these days, we can still learn some incredibly important investing lessons from him. Be greedy when others are fearful, and fearful when others are greedy. So there will be times when markets will be setting all-time highs, and there'll always be people saying it's going even higher, everybody's making money, everybody's suddenly an expert, and the primary emotion in the market is greed. And these are the times where we should begin to get a bit fearful. And then we have the periods of market crashes, and there will always be people saying it's going to go even lower. Everyone is losing money, and the primary emotion in the market is fear. But this is the time where we should begin to get greedy. So essentially what he's saying is to become a contrarian, to train yourself to do the opposite of what most people are doing. And buy low, sell high sounds easy in principle, but it's actually incredibly difficult to do. The stock market is a device for transferring money from the impatient to the patient. And this one right now is really key. The crypto market is a device from transferring money from the impatient to the patient. And one of the biggest differences between the amateur and the professional is patience. Although professional investors don't want to wait either, they will wait 6 to 12 months for the market to recover. Where the amateur gets impatient, they get caught up in all the fear, and then they end up selling at exactly the wrong time. So remember patience, as storms always pass. And this was on market timing, the ability to be able to sell at the top and buy back in at the bottom. In 65 years, I've never met anybody who can consistently do it. Now, it would be amazing if we could sell at market tops and then buy back in at market bottoms, but the sooner we learn this important, life-changing lesson, the better. No one can consistently predict where the market will go in the short term. And the key word here is consistently, as most people will probably get it right about 50% of the time. But think about it, if you're right half the time, then you may as well flip a coin. And it's quite simple, no one knows the future. No technical analysis can tell you the future. No one on the news, no one on YouTube, TV, radio, or anywhere else can predict the future. The market is made up of millions of transactions from millions of people all around the world with billions of data points, and it's impossible to know the future before it's happened. And so all we can do is have a plan for if the market goes down further or if the market begins to go back up. It really is that simple. Okay, and to finish this lessons from the master section, here is a great clip from Charlie Munger. And the interviewer asked him if he was worried as Berkshire Hathaway stock had just fallen 50%. And his response is everything you need to know.
How worried are you by the declines in the share price of Berkshire Hathaway, the difficulties the company's in?
This is the third time that Warren and I have seen our holdings in Berkshire go down top tick to bottom tick by 50%. I think it's in the nature of long-term shareholding with the normal vicissitudes in worldly outcomes and in markets that the long-term holder has his quoted value of his stock go down and then by, say, 50%. In fact, you can argue that if you're not willing to react with equanimity to a market price decline of 50% 2 or 3 times a century, you're not fit to be a common shareholder and you deserve the mediocre result you're going to get.
Now, I don't know about you, but I do love a good dose of tough love. Thank you, Charlie. Okay, moving on. Now, for anyone interested, this is how I'm thinking about the crypto market right now. Just note that this is just my opinion and I could very well be wrong. Never just copy off one person. This is just how I see the market and what I personally will be doing. And hopefully for some people, they will find it useful. Now, the main thing I want to know before investing any money is crypto actually dead or will it come back? Because if it's not dead, then this is a huge buying opportunity. And to keep this video relatively short, I simply don't have the time to list everything going on right now. I have covered a lot of it in recent videos as there is an incredible amount of developments going on right now. From countries making Bitcoin a national currency, to corporations and institutions beginning to buy Bitcoin and Ethereum, to several banks now integrating with crypto, to ETFs now going live around the world, to billionaire investors now adding crypto to their portfolio, to payment providers like PayPal and Square and Robinhood all integrating and offering crypto, to multiple billion-dollar industries beginning to pop up. There is simply so much going on in crypto, it's crazy. So for me, I highly doubt that crypto is over. In which case, this is probably one of the best and last chances we will ever have to buy crypto at these levels. And so here is my game plan. And so no one knows where the market will eventually bottom out, so I need a plan for if the market goes lower and if the market goes higher. And I've been buying at set points as the market's been dropping, and I'll continue to do so until the trend reverses. I base everything off the Bitcoin price, as Bitcoin still rules the market. And so my next buy points are if Bitcoin were to drop to $28,000, $24,000, $21,000, and $18,000. And I will be buying Ethereum at whatever price it's at if Bitcoin hits those price levels. And when the trend reverses, I will go into hold mode, and then my initial take profits will be at a Bitcoin price target of $95,000. And I will be selling either 10% or 20% of my entire crypto holding to be confirmed. And just to reiterate, this is not something I recommend other people do. This is right for me based on my personal circumstances, but by me being completely open and transparent, it does give a reference point to help you with your own research. It's easy to be cheerful when everything is going right. The real test of character is how you react when everything is going wrong. So, to sum up, there are 3 types of people: the investor, the trader, and the amateur. No one can predict the future, and no one knows where the market will be going in the short term. Be greedy when others are fearful, and fearful when others are greedy. Having a longer time frame of over 1 year massively reduces your risk, and patience is the key. And I believe 6 to 12 months from now, we will probably never see crypto at these levels ever again. And if you followed the previous investing principles of only invest money that you can afford to lose and only use money that you don't need for at least 1 year, then all you really need is patience. And remember, daytime has always followed even the darkest night. And spring has always followed even the harshest winter. So there you are, guys. Hopefully there was at least one thing in there that you found useful. If you did, then drop a like, and a big thank you to everyone who does. If you haven't yet subscribed to the channel, then what are you doing? Click below and join us. I do have some great videos coming up that you don't want to miss. Okay, cheers guys, thanks for watching, and I'll see you in the next video. Bye for now.